Hello guys, this is Hassan from HTFX and welcome to another video. Now in this video I would like to talk about US dollar Japanese yen. Lately I've been trying to do the ones that are actually correlated to each other, okay? So this is why it's important. On this video, let's look about what we have. Okay, well, first of all, to be honest, I tried to do this US dollar Japanese yen before and I failed. Okay, and I did even a video about it, like how I failed. But what I can see actually here, my starting point of the chart is not very correct also. Okay, so you should know this as well. But it does look like we have something like this degree somewhere around here, but about for the degree I actually don't know. Okay, looks like we have something like a wave A here, okay, wave B and a wave C. Okay, and whatever this move was, it is an X wave, and I don't know if after this we will have a wave A, B, C, D, E. I don't know, but it looks like we may have a triangle after this. That's my opinion, but for this degree I am not so sure. Okay, but on the lower degree it looks like we have something like wave A, wave B and a wave C, and this wave C move is a terminal move. Now whenever you have a wave A, a wave B that actually does not go more than 618, let's check. Look, it doesn't retrace more than 618, and then you have a C wave that makes a new high. Okay, this pattern is called a zigzag. It is a corrective wave. Okay, this is why, because it's corrective, it is labeled with letters, not numbers. Okay, now any C wave and any wave A of a zigzag, they are impulsive move in one lower degree. For example, if you want to have a C wave, you need to have in one lower degree. In our case, I chose this color, 1, 2, 3, 4, 5, just like on the wave A. Okay, for example, if this pattern was a flat, okay, then we would have an retracement of a B wave that is actually more than 618, and in this way there are the two differences between a zigzag and a flat. That's actually here we would have 1, 2, 3, 4, 5 as a C wave of a flat. In here we would have an ABC as a wave B, and also we would have an ABC for a wave A. Now look at the difference. Okay, now this C wave here, it can be either a classical impulsive move or a terminal impulsive move. Now if it's a terminal move, it means that it will be something like it may, okay, it does look like something like a wedge. Okay, now sometimes it does, sometimes it doesn't. This one doesn't. If this is the case, then there is also one more thing that we should check. Now the thing that we should check is the length of C wave as for the time. So this is the time for wave C to form, yes, from the start to the end. What we should do is we should use our Fibonacci time zone tool, okay, and check the 50% of it and put it on the end of wave C. This is the end of wave C. And look, the market should have come all the way there back to where it started, so end of B wave in due time. And as you can see, the market does that. So it means that we really may have a terminal move. It's an ABC. Okay, if this is a wave ABC, what else? Well, in the bigger picture, I told you that I'm probably guessing this is an X wave, but that we don't know. So after this, what starts? Well, look, usually I don't actually go to 1 hour chart, but in here, I wanted to go to 1 hour chart. Now, it looks like we have an A, B, C, just like the pattern that I described here. It is less than 618, as you can see, and it is in zigzags. Usually, wave A, the time taken for wave A, is similar to the wave B, just like here. Okay, it is so similar. But when you may say to yourself, okay, then, but in here it's not similar. Well, if the C wave is a terminal move, then it's not similar. Okay. Now, it looks like what we have here is a complex correction. So we have an A, B, C, and X wave. Okay, why we need X wave? Because it is not a simple correction. If it was a simple correction, then it would have been something like this. So it means that it would have finished something like this. So just as an example, let's do like this. Okay, and then a reversal move should have come. Okay, but now it didn't do that, and because it didn't do that, it's still continuing downside. I'm sorry, just a second. My bad. And now after this X wave, because the reversal didn't start yet, I cannot put this degree here, but it should be on the right side. Now can I put here? Well, the problem with after this move, the X wave, it looks like we have a wave A here, either ended here or here. That I'm not so sure about. But if this is the case, let's say it's ended here, okay? If this is the case, the market should do something. Now look, let's check from the start of the wave A to the end of wave A. Now look, if this move, no, sorry, my bad. We should do this. Now look, from the start of wave A to the end of wave A. Now look, you can see that this did go more than 618. Okay, it's much more than 618. Now it means that we cannot have, this is not a zigzag anymore. Okay, and you cannot say, oh, maybe this is wave A, this is wave B. Just a second. You cannot just say this is wave A, maybe this is wave B, and this is wave C. You cannot say that too. Why? Well, it's because this in a zigzag formation, the C wave always has to make a new low. So this is not a place where I can put wave B. But if this is the end of the B wave, which we are not so sure, look, we have A, B. Now, we should look further what the market is doing here. If we will have a rejection here, okay, and go lower, or no. If this is a rejection, we have two options. Well, after this X wave, we can have an A, B, C in the form of a flat, like this one. Okay, we can have a flat that in the flat, the C wave can actually end before or after the wave. It does not require to make a new low. Okay, so it can end here, it can end here, it can end pretty much anywhere it wants. Or let's see if you will have a C wave and then some type of a D wave and then an E wave, then it will be a triangle, then it will be this ABCX, ABCD. It will be a combination, a double combination, which to be precise, and then that will be probably the end of this degree, whatever it is here, and then we will start. Then wherever it finishes, we will need a 618 if it's not a triangle. Okay, because this move is corrective, it cannot be a zigzag, even if it's a corrective wave. It cannot be a zigzag because this move, whatever we are looking for, whatever we are looking at, is not a impulsive move. Okay, so I hope this makes sense, guys. And also, I wanted to show one more thing. Now, let's go to the 4-hour chart. Now, the market actually did return from this trend line here. Now, this trend line, of course, this is a little bit subjective.
anyone. But look how this trend line acted. My bad. Before, look here, it's rejected. All of this move is rejected. It was a fake break here, but then it rejected again. Here again, and then it did turn into support many times. Here, 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 here. It was this support and resistance here as well, and here as well. Okay. Also for this one, where this look at this where the B wave finished. So what we should check if the market will break it. Then if it will break it, it means that maybe this B wave is not even done yet. Okay, this B wave, there's a chance that this B wave is not finished yet, because look, if you go back to the 1 hour chart, and if this is the end of wave A, okay, it may look like we have a wave A, B, and a C wave. That is a possibility as well. So we should always be careful what's going on. Okay. Now you cannot just simply put the B wave here just because you thought it is. Okay. So thank you so much, guys, and see you on the next one. Okay.